Hey there, welcome to the weekend review video for the Santiago synopsis. I know it's been a minute, but I'm getting back to doing these videos regularly. There was a lot of stuff this week that I felt like this was the perfect week to bring them back. If you are a Santiago or Arlos Wealth client, in this note, you will see down below there is an omen that I share. It tells you more of why I'm doing these videos again and getting back to creating more content and spending less time on things that don't align with what is most important to me. And what's most important to me, one of those things is communicating with all of you regularly, and figured I would just share this with the world as well if there's anybody out there that this may help as well. Every week, going to be breaking down the headlines that may or may not be impacting your life plan, financial plan, and portfolio. I've got my cheat sheet here with all the things. I feel like I'm a news reporter with all of the headlines I want to discuss. So let's go ahead and dive into those headlines that may or may not be impacting your life plan, financial plan, or portfolio. We're going to start off with probably the biggest news over the weekend, the bombing yesterday over in Iran. The U.S. and Israel teamed up together to take out a significant part of the leadership of Iran, but this looks like we're heading into a little bit more wartime than we've been in recent times. So obviously that is usually a cause for concern. Anytime over the last few years where there's been anything remotely close to a war, Ukraine and Russia, hints at things, there's always a little bit of concern of what does this mean to my portfolio. And in the short term, it usually means the portfolio becomes a little bit more volatile. You'll see oil spike and all these other things going on that impact us in the short term and are important to pay attention to, above and in addition to all of the geopolitical and the other things that go on. But when it comes to your plan and your portfolio, it ends up being short-term noise. Doesn't feel like it in the moment, and obviously we can run our different narratives of what this may be and what could possibly happen and how bad it could get. And yes, all of those scenarios are possibilities, but are there realities? Probably not. And if you think back over all of the years that you have been investing and people have been investing, there have been wars, there have been assassinations, there's been all types of things that have happened, and the long-term trend of the market is still up and to the right. So I feel like that will still be the case coming out of this, but it doesn't necessarily mean that we head into Monday feeling really great. And I took a look at the futures on Sunday night, and the market is looking like it's going to open up, the Dow at least, open up down 500 points. So to be expected. Now, very well possible that some things could happen, some news could come out overnight, there could be some conversations, there could be a ceasefire, who knows what could happen in the short term, and then the market ends up the day in the green. We don't know that. Another piece that kind of adds the wild card to it is the bombing today on Sunday in Dubai. Many believe that that was done to try to make the U.S. stop because of our ties to Dubai, and there's a lot of expats and a lot of U.S. folks in there, kind of like the innocent bystander of this current back and forth that's going on. So a lot of headlines, a lot of things to pay attention to, but that's obviously the biggest thing. Will it impact your portfolio? Yes. Short term. Will it impact portfolio 5, 10, 15, 20 years out? Probably not. Maybe there will. Maybe something happens that we can't even dream up right now that would, but that's going to be out of our control. And we just want to focus on what we can control, and that is our emotions, our behaviors, sticking to our plan, and paying attention to what's going on, and doing whatever we can to do our part to kind of help things, whatever that's, sending thoughts and prayers, sending, gifts over, or sending packages over to troops. But I think that if anything, it's pulling more together is going to be the most important thing in this, rather than the two sides battling each other like we've been doing for so long. Two sides within the U.S., that is. So, the Middle East is the big news coming out of this last week, and it just happened over the weekend. Earlier in the week, we had some activity with the tariffs. The Supreme Court voted 6-3 against the tariffs that were out there. The market celebrated that, and then very quickly there were new tariffs through a new way, maybe a loophole, but new tariffs were put into place that kind of crashed that party. So tariffs aren't going to go away. They've kind of calmed down, conversation-wise at least. We had all of the big hoopla about it beginning of last year, and then we had the market kind of sell off, and then a great run into the end of the year. Back into the conversation are tariffs. So one of the things that these headlines around the tariffs specifically kind of highlight is how we don't want to always react to the markets. Again, you could have bought into the market when the tariffs were announced to be illegal. you would have been happy, and then automatically it comes back down the next day when the tariffs are right back on through another way to get there. So buying and selling on the headline, I won't say it's impossible. I don't think it's easy to do. I don't think it's the best strategy to go forward unless you are an active trader and that's your thing. And most of us have other things that we are worrying about. So probably not the best thing to do is to react to the headlines. All right, so after that, we've got inflation data. The PPI surprise, so January, the producer price index came in at 0.5%. The expectation was 0.3, but the real high one was the core PPI, which is not including food and energy, was 0.8% versus 0.3% expected. So that was a big difference, not a great thing, which the markets didn't like. So stocks dropped as a reaction to higher inflation. 1 month of hot inflation doesn't mean that that's the trend. We're much lower than we were, a couple years ago. But remember, the Fed is obviously also paying attention to inflation to determine what they're going to be doing with interest rates, which leads us into the next one. The Fed stayed neutral. They didn't raise rates or lower rates on this meeting this month. So they said they're going to be continuing to watch what's going on, as that's been the case. But they didn't do anything this month, which was not unexpected. The market is expecting to get the first cut again in June. So expectations of the next few meetings, nothing. June, we might get another cut. Tons of things can happen between now and there that would change that. So kind of quiet news on that, no big surprise there. February, going to the market next. February was not a very pretty month, but that's okay. We have these months. It's good to have months that aren't always great. We got to have the market kind of reprice things. A lot of selling in those big tech names that did awesome last year. So depending on how you're investing, you might be having a terrible time right now, or if you're in a diversified portfolio, you're still up year to date and looking good because of international and small cap and other areas. So while I do think that this could be more of a stock picker's market because of the transition from those tech names, we're seeing software sales companies getting hit really hard. There are some names down really big. If you are a stock picker and moving things around, you could be navigating that. But if you're a diversified investor, the doom and gloom you're seeing in those tech stocks is not necessarily what you're experiencing. Even with your exposure through your diversified funds to those areas, you're still probably doing all right and up year to date despite that. So yay for diversification being our friend right now, and yay for other areas of the market picking up from where technology is falling right now. Who knows what the rest of the year has to say. A big part of the technology selling off is kind of the conversations around AI, which is the last thing. Kind of disruption fears of AI taking everybody's jobs and putting everybody out of work. And if I'm being honest, I think that conversation, the pendulum has swung too far. I do think, and we're seeing that technology and AI is replacing some jobs. Block, that used to be known as Square, they laid off, I think it was 4,000 people this week. Significant number of their workforce they laid off, and they're going to not necessarily replace them with AI, but those who are staying using AI to be more efficient to replace the number of people that they need. Probably we'll see more of that. But just as every kind of revolution that we've had, industrial, moving more to technology, there are jobs that go away and new jobs that we can't fathom yet that come up. New opportunities are going to come with AI. So I think that the conversations of AI putting us all out of work are overdone. I do think that it is important for us to kind of see how does AI potentially impact what we're doing and where we're at, and how can we leverage AI to help us to make us to where we're not subject to being replaced because we're using it to help us be more efficient and more effective. Financial advisors, for example, there's a lot of talk in our profession about us being put away by AI, and I think that potentially if a financial advisor is only doing investment selection, then that's all they're offering, then that might be replaced for a lot of people by AI. But when it comes to doing the planning work that I'm doing, the life planning, Align Life Plus, when it comes to relationship, when it comes to doing more than just investment, talking about estate planning and tax planning and meeting with people regularly and really focusing on the human part of financial planning, I don't think technology ever replaces that. And if it is, it's years away before I think human beings feel that same level of comfort sitting across from a robot. Robots might be able to pick up the heat sensors that somebody's heat is, or their body temperature is elevated because they're feeling an emotion, but it's not gonna be the same as me sitting across from you and feeling that unspoken communication that there's more that I need to discover, or that you need to be comforted because I can pick up on the stress that you're feeling. I think that for, at least in the financial advisor space, that advisors that are doing that type of work, we're going to use AI to make us more efficient so that we can spend more time doing the things that AI can't do, which really excites me about the future of my profession. So again, looking for opportunities. If I'm an investment only type of financial advisor, to be an example, what am I thinking about? Well, how can I not lean on my whole value being investment selection? What else can I do for my clients to make myself more valuable to them, to where they may not want to replace me with AI? And I also think that, again, in my profession, when you get to a certain level of net worth, you want somebody helping you, overseeing, making sure you're not missing something, being aware of the things that you don't know, or you don't know that you don't know. And I think that's where human comes in. I think every profession and every job has that same ability to reflect on what can I do to make myself more valuable to my company, to my clients, to my customers, whatever it might be. So, but that AI disruption is really responsible for a lot of the sell-off in the tech companies. I also think it's just also part of 2 years of back-to-back great years of the market, really driven by those companies. They're up a lot. So even with a Meta down, I think maybe 20-30% now, they were up so much the 2 years before. They're still way ahead. So again, I think that the pendulum has swung too far on the fears of AI. I think there will be some disruption. I don't think it puts us all out. And I also just think there's this threshold to a point where, at what point does it become not as valuable to companies to put everybody out of work? Because if we're all out of work, we can't buy the services. So there's going to be this greater good component to where they don't want unemployment to be 50%, because then their businesses suffer. So although they're saving money by not hiring people, they're losing more than they're saving by not being able to sell their services because people can't buy them. So while I know there's a lot of negativity and despair out there, I still just think that everything's going to work itself out, and there'll be a little bit of discomfort, but those that are willing to be forward thinking and proactive and think outside the box and not sit there and feel bad about what's going on and look for the opportunity, I think those will be the ones that will thrive. So I would encourage you to have that mindset and move in that direction. All right, that is it for this week. A little bit of a longer one to get back, but there were 6 headlines. I wanted to make sure I gave them all a good amount of attention. I'll be back next week with whatever happens in this week. Probably a continuation, at least, of the Middle East conversation, and who knows what will come this week as well. So appreciate you tuning in. Glad to be back. These will be back on the weekly schedule. I've got it slotted in my schedule, so it'll be in the Santiago synopsis, but I'm also going to share this publicly on my YouTube channel for anybody else who might find value in listening to this. So with that, I will let you go. Appreciate you tuning in. Looking forward to being back next week. And until then, keep pursuing.